Hi everyone. Thank you all for following and supporting. This video, as you can see by the title and thumbnail, will be my investing $100 a week. The goal of this is just to give you guys and anyone following along the idea and the understanding that you can invest as little as $100 a week and still build wealth. Right? I think when I first started investing, the big struggle or the big stress in seeing accounts like a Jeremy or Graham Stephan investing $10,000 at a time, you feel so far behind. You feel like the journey is going to take way too long. And so the goal here is to show you that it doesn't take as long as you think. A, and B, it's not a hard process. It's just about consistency, discipline, and iterating, right? And so the goal of today is just to show you and show everyone following along that all you have to do is invest $100 a week. Obviously, more stuff on this channel. We'll talk about the classics, hymns, Nebius, Zeta, and any other investments I follow and build on. But the goal of this video is just to do $100 a week. So, as you guys, sure expected, my first buy to the portfolio is Nebius. As many of you follow me, you guys know I've been big on Nebius for about 6 months now, and I think going forward it'll still be a big winner. I think right now we're in a market sentiment where Nebius is sort of in all day AI data center stocks, to be frank, are in a prove it mode, right? So last year we saw 10-20% moves on contracts and GPU purchases and data center expansions and buying land. I think moving forward, what we're going to see happen, and I think to see sentiment change, it's going to be prove it, right? And so those megawatt contracts you got from Microsoft and Meta, are they actually going to come to fruition? Is there actually going to be revenue generation? Are those contracts going to keep going? A lot of speculation I've seen is, well, they can just end it whenever they want. It's not guaranteed. They don't have to do it, right? And so I think as the quarters progress and as we continue to, as this space continues to grow, it's going to be improvement mode. And so I think this year is a big piece for Nebius to just improve economies at scale, prove that the 9 billion of ARR isn't BS. I'm being conservative in that regard. I think they're going to come in at 7, but I think just to prove that the ARR will come in. We saw a big spike last year and we see another guided spike of this year, and I think we're in a spot to prove it. But I'm sure, as you guys expected, that is my initial first buy. But like I said, 7 to 9 billion of ARR, contracted power of 2.5 gigawatts, connected power of around 900 gigawatts, or geez, gigawatts, that'd be a lot. 900 megawatts up to 1 gigawatt. Obviously, last quarter they sold out of all capacity. I think that will probably be a trend going forward until we see some sort of slowdown with an NVIDIA. I don't think we'll have a quarter for a while where capacity isn't sold out. You also saw last quarter they partnered with Meta and they only sold $3 billion of capacity. And that's because that's all they had left, right? And so I still think we're in a period of extremely high demand and extremely low supply from Nebius. Yeah, that's my first buy. My second buy, another one I'm sure you guys expected, was Zeta. This again is another 25% of the portfolio. So we have Nebius at 25%. We have Zeta at 25%. So half my portfolio is just two positions. The reason I'm in Zeta, and a large reason as to why I invested in it, is A, my buddy Davis actually pointed out to me. But B, because everything is trending in the right direction, right? And so let me hide this real quick. We can see the orange operating profit is slowly turning from a negative 123 million to a positive 8 million. We see free cash flow trending from, down to about 7.7 million now to 52 million. We also see free cash flow margins. See this blue line in a slow uptrend ever since basically Q3 of 2023. And so, and right here, previously last quarter, you see kind of an inflection point. And so I'll really be looking at this next quarter. You also see revenue continually just to keep stacking and keep building. Now on an annual basis, again, you can see there's just slow improvement. And so it's just a software king. And I think in a few years, this will be a re-rating, A, because it'll be GAAP profitable. A lot of hedge funds cannot invest in companies that are not GAAP profitable. And so that's a big catalyst for me going forward. A lot of my other companies I invest in, like a SoFi or a Palantir early on, the big spike was after a couple quarters of profitability because it proves the business model works and a lot of other hedge funds can now invest in it. And the last thing is the reason I'm buying this is evaluation. So if we hide all these metrics, this valuation is just nuts. So most software companies, SaaS companies, I mean the really quality ones like a not a Snowflake, but like a ServiceNow, and a few others trade around an 8 to 12 price to sales. Zeta currently trades at a 3.9, right? And so even if we're conservative and we say it trades at a 6 price to sales, which to me is still undervalued for a SaaS company, especially one that's going to be profitable, one with inflecting free cash flow margins, and one that's just a consistent compounder, the stock price is going to me, double in the next 18 months. And so that's another reason as to why I'm picking Zeta and making it a large part of my portfolio. Okay, so my third pick is Hims. I think a lot of you probably suspected this as well. So now we have Zeta, Nebius, and Hims that make up 65% of my entire portfolio. Um, and so the reason I made this 15% is I think moving forward, there's still some headwinds, right? I think a lot of the sentiment obviously has been changed. I think there's still the overhead hanging doom of a lawsuit with Nova Nordisk. And so I think again, sort of like a Nebius, but with even weaker sentiment, Hims is in a prove it mode. Prove you're not just a GOP1 company. Prove that you actually can move down market. Prove that you can innovate on more products such as a TRT, HRT, um, and go in that route. Prove that you can expand into Canada. Prove that the Zava acquisition was actually worth it. And so we're at a point again where I think this one might take more time to have some appreciation, because sentiment is just so down in the dumps. And even Andrew Dunham himself has said that they're in a transition period with Hims. And so I think the next couple of quarters we'll see some staggering movement. But overall, and the reason I still like this company is they're still a compounder, right? I think people get so caught up in the sentiment that, oh, this stock sucks. Oh, it's not going to go anywhere. And as you can see, over the past 4 or 5 years, we are in a fantastic spot. Let me move this 125 as well. We're in a great spot. You can see here the reason we're now flat is because the revenue is basically flat from Q1 to Q3. Now, if you look at an annual basis, this is not flat, right? They're doing great. And you can see again, free cash flow margins have inflected to now 6.5% for this year. We'll see how next quarter comes out. But again, this is another company that I think is in sort of a proof it mode, but with even worse sentiment, like a Nebius. But I trust Andrew Dunham and team. I trust that people care about their healthcare and like to take action on it. And so, yeah, I think Hims will do fine. We'll be fine. Maybe the next 6 months, nothing happens, but over the next 3 to 5 years, I think this is going to be a much, much larger company. Okay, so my next pick is Meta. Now, this will probably surprise a lot of you. If you've been following me for a while, you know most of my names are in the $5 to $15 billion market cap. You know, low market cap or mid cap companies that are growing at kind of astronomical rates or in early growth stages. And so Meta is a different one for me. But there's a few reasons as to why I bought them. As you can see here, when I originally bought them, it was around 15% of the portfolio. And so now we're at around 80% in total. So Meta makes it 15, Hims 15, and the other 50 is Nebius and Hims. And so the first reason is just, I mean, they're just a phenomenal company, right? If we go all the way back to 2011, I mean, this is a compounder to say the least. um, you don't doubt Mark Zuckerberg, in my opinion. And so the reason I'm really buying it is more of not a trade, but a short term to midterm play. As you can see here, on a forward PE basis, Meta is clearly the cheapest, right? I mean, they're trading at a 22 forward PE. Nvidia, which is also pretty cheap, granted 27 forward PE, and the rest are around the high 20s, low 30s. And so it's more of just a play of an oversold valuation. So even if we go the past 3 months, down 10% from the high, down around 15%. And so for me, this is more of just a flip, as I think this year Zuckerberg would do all he can to, again, like he did in late 2022, cut costs, prove that what he's doing in the spend he's putting in is actually, a return on that invested capital, and they'll continue to dominate. I mean, you have WhatsApp, You obviously have Meta, you have their ad platform, and now he's acquiring these MBA contract deals for these AI engineers. And so I think you'll see a lot of innovation from Meta over the next 2 years and a lot of profit and a lot of free cash flow. And so for me, this is just an easy bet over the next 2 years. Super comfortable. I probably won't even keep up much with the news on Meta unless something crazy happens. But yeah, that's my fourth pick is Meta. All right. So my fifth pick, our second to last pick for the $100 portfolio is Amazon. So again, another one that I think will surprise most of you. I don't really go down the Max 7 route. But the goal here again is to kind of just show you how to create a overall portfolio. And so I didn't want to do just high beta, what do I call speculative names. I wanted to kind of show you that you can kind of play both sides. You can play undervalued Max 7 or big tech, and you can play high growth. But yeah, Amazon, that's my fifth pick. Again, I made when I initially bought this is 15% of the portfolio. And so we're now 95% in total. Um, yeah, just another one that they're not going anywhere, right? I mean, if you look at that's Meta. If you look at Amazon over the next or the past 15 years, it's just again another just massive compounder. They're probably going to hit $1 trillion in revenue in 2020, 2030, 2031, which is just first of all insane. 1% of margin gives them $100 billion, or sorry, $10 billion, which is just nuts. Again, as you can see too, free cash flow, operating profit, just a compounder, slowly increasing. You have AWS, you obviously have Amazon, you have Whole Foods, you have their whole suite of products. They're not going anywhere. We all know what Amazon is. We all know why you'd want to buy it. And the reason for me as to why I'm buying it is on a 5-year basis, it's actually underperformed the S&P. So if we look at 5 years, 41%, and if we go to the S&P 500 on a 5-year basis, it's 83%. So the S&P has doubled Amazon over the past 5 years. I think a large part of that, to be fair, was the COVID drop. As we saw, Amazon lost a lot during that period, from 2020 to about 2022, like most big tech. But I do think that over the next 2 years, Amazon will outperform the S&P, and so that's also my bet. So again, sort of like a Meta. These are companies that I think anyone can hold forever. But I think for me, what I'm going to do is probably play them over the next couple of years and see how it goes. But again, this is just like a Meta where I can sleep well at night, knowing that this stock is not going to drop 40% in a month, nor is it going to go up 40% in a month, like a Nebius, like a Hims, like a Zeta. And so this kind of balances the portfolio and gives a good little anchor. So 30% of the portfolio is sort of anchored in these two big tech companies that I think are undervalued in the current period. You also have, just a note, robotics with Amazon, right? So as Tesla Optimus and Figure and a few other companies and Amazon themselves build out their robotics pieces, I mean, you're going to see profit margin just skyrocket, because what they're going to do, and unfortunately, it's something that I think is a big deal, is it's going to cut a lot of employees. Well, that will make Amazon a lot wealthier, and so I'm going to invest in that as it's probably going to happen. But that's just another reason as to why I'm buying Amazon here. All right, and the last pick, and one that you guys probably saw on my tabs and was a little confused, is a ticker symbol called IBIT or IBIT, which is just the iShares Bitcoin Trust ETF. And so what I did is I bought this as a 5% hold. The reason I did this and the reason I didn't buy just flat out Bitcoin or flat out Ethereum is A, you can't have it look on the same portfolio. So we wanted just a UI perspective. I just wanted it to be within the portfolio so I could hold an equity. But B as well is I believe Bitcoin and Ethereum will be here for a long time. Now, I am not some Bitcoin maxi or some Ethereum maxi, nor do I understand the blockchain or how to stake or the wallet and everything there. But I do think that the crypto market in general is here to stay and here to stay for a long time. And so I just wanted a hedge and a bit of an exposure to it. And so that's why I made it 5% of the portfolio. I think over the course of the next 10 years, Bitcoin Ethereum will outperform the S&P. And so the goal here is just to have a slight allocation to it as A, I don't understand as much as most do, and B, it'll be here to stay. And so for me, that's really all there is to it. Um, this has only been an ETF for about, I think, 2 years now. Yeah, so Jan 2024. Yeah, so about 2 years now. Um, but again, I'm not buying it because I think Bitcoin will double, within the next month. I think I own it because it will be a persistent asset in the global system, right? And so I wanted to give a small allocation that would give me the asymmetric upside without it dominating the portfolio or being some crazy part of the portfolio. So yeah, that makes up the entire $100 portfolio. We have Nebius 25%, Zeta 25%, Meta 15, Amazon 15, Him 15, and I bet at 5. Again, the goal of this is just to show you guys you can do it too, even with a $20 a week. When I first started investing, the thought of investing $5,000 in a year was just insane. And so the goal of this is to show you over the course of the next 10 years that this will compound into probably a six-figure portfolio just by investing $100 a week. Nothing crazy, nothing outlandish. It's a dynamic portfolio. So let's say 1 week, Hims comes out, Andrew Dunham leaves Hims, right? That's probably for me a thesis breaker. And so I'm going to sell to Hims. The goal here is to also show you how to manage the portfolio, how to think about it, the processes I take, the things I think about. And you'll also see on my channel news and all these followings like Nebius, Zeta, Meta, Hims, Amazon, and maybe even some crypto stuff. Um, but the goal is just to give you an overall thought process of how to do it, what to do. I'm now going into my 7th year of investing, which is kind of crazy. Now that I think about it, like putting this into perspective, when I first turned 18 and I was watching people talk about how they have $4 million portfolios or they're investing 15 grand a month, it made it super daunting and seeming like an area or a realm where I can't even get into. And so again, the goal is to show anyone can do it. And just have a neat little visualization. I took this, made this in like 2 seconds. But we got Nebius Zeta, Hims, Meta, Amazon, and then IBIT, which is the Bitcoin ETF. So again, thank you all so much for watching. I really do appreciate the support. It's been sort of awesome to see all of you subscribe. I think there's already 200 of you, and I didn't even post a video yet, which is awesome. So again, yeah, I appreciate it, and I'll see you guys in the next one. Thanks.